welcome on board Deven Choksey as well on that note. Deven, hi, good morning. Good to have you on the show. Seems like short covering currently at play. How do you think investors should best use this rebound in the market?
Yeah, Aisha, good morning. I think it's a slightly challenging market from the momentum point of view. No doubt the momentum continues, and if somebody wants to chase this momentum, I think you have an equal chance of getting disappointed because of the higher amount of risks on one side and at the same time event risk on the other side. So to a greater extent, I think one will have to play very safe in this market, in my understanding. Fortunately, in the frontline stocks, I think there are plenty of companies which are probably suggesting the fundamentals are right intact, and at the same time, they haven't participated in this rally in the market beyond a point. So, to a greater extent, I think likes of Reliance, likes of Bajaj Finance, likes of Kotak Bank, I think are some of the companies where probably you find that the business condition remains absolutely upbeat and robust, and at the same time, the stock prices haven't moved anywhere, despite of I think the rally going on in this market. So to play safe even in this momentum-driven market, I would not leave the fundamentals. I would keep the fundamentals first, and then possibly I think chase the momentum. That is the approach that we have communicated also to our customers.
So, Devin, you do track Reliance pretty closely, and that's really been one of the biggest contributors in the last lap of the rally. And I'm not talking about yesterday's price action where it, caved in from the top of the day. But do you think Reliance is going to be one of those leadership stocks for the markets to move forward even beyond elections?
Undoubtedly, because I think if the market has to scale newer heights, I think the participation will have to come from some of the larger names. Currently, the participation is coming in also from some of the side names, and that's where probably I think one is not one fully convinced about the valuation of those companies. And that is where I believe that I think the stronger companies like Reliance in this case, I think they deserve to be there in the portfolio. Few more important aspects I think that we are considering out here. On one side, because the capex program for the geo platform as well as for the retail is mostly covered. I believe that I think in the 12 months from now, I guess I think these two companies should find a separate monetization process. I think by way of listing. Uh, so that could be value unlocking. And generally, one has seen that I think when this kind of event happens, the value unlocking covers up, I think, the whatever the past efficiency in form of earning returns on the stock price gets covered up in, I think, a shorter period of time. So this is one area where probably we remain distinctly positive and confident. The other important part in the financial year 24-25 is going to be the starting of the renewable business. The renewable business, along with the entire ecosystem which Reliance is building, I believe that I think this particular chain is going to create the larger buzz in next 3 to 4 years time. So yes, I think you have plenty of programs where you are likely to see the higher amount of return coming to you, of course, on a steady basis. I think that's where we like Reliance the investment portfolio.
Point taken. Devin, hi, this is Anisha also joining in the conversation. What's the view on chemicals? Because for a change now, the commentary is now turning a bit positive and there are early green shoots that perhaps a turnaround is on the cards. What's your take? And which segment of chemicals, if at all, one should start nibbling in?
Yeah, Nisha, good morning. Uh, I guess important point out here. Couple of things have happened, and that is where I think one would like to believe that chemical turnaround is a real in this particular case. The past inventory on most of cases, I think, have been at a higher price because they were probably booked at in the bull cycle, and they probably played out in 3 4 quarters thereafter. As we were counting, I think the third quarter of the financial year 24, and I think the fourth quarter validating thereafter, we were counting that this high cost inventory will get flushed out of the books, I think, from the of the most of the chemical companies, specialty chemical companies. And that's where probably I think the higher amount of margin expansion one can argue for. I think in the last quarter, we have started seeing the effect of some part of the margin expansion in many cases. I think, and that's where we like to believe that in next 3 to 4 quarters, we are likely to see stable input cost at the same time better margin And fortunately, I think the segments, including the specialty chemical segment and the agrochemical segment, they are the ones which are looking really interesting. Those companies which are into the API segment, I think they are also equally looking interesting because their foreign customers have actually started picking up a higher amount of content from them. So, likes of PI industries could possibly also be an interesting play going forward in the investment portfolio. One will have to be selective because this is a commodity-driven business, and normally 3 to 4 quarters, either by 6 quarters, in which I think they play out fully. So suppose if we have started the momentum, upside momentum, I believe that there is a headroom available for next 4 quarters or so in this particular sector to make the momentum-based money out of chemical and specialty chemical and agrochemical segments particularly.
Okay, Deven, what's the outlook when it comes to the entire cement cluster? Because the sense is that with the falling demand and falling prices, this sector could feel the heat. Would it be an opportunity to dip in or a bit of an avoid for some time?
Well, I think it's slightly difficult if you have to time the market for companies like Ultratech or for that matter ACC Abuja, largely because of the fact that
Take from you as to what the outlook is within the entire pharma space, owing to the fact that we've seen quite a bit of traction building up here. Results as well have been supportive. What's the outlook?
well, I think selectively you can remain positive. I think the companies which are in specialty generics, I think they hold a good ground because of I think the better quality of margin that they earn out of this business, likes of Sun Pharma, likes of Cipla, even for that matter, Dr. Reddy, and even Lupin for that matter, of late. I believe that I think there is portfolio increasing, I think, of the specialty products, specialty generic products, is basically driving better margin for them and continue to do so in subsequent quarters as well. Though some of the stocks might correct on the pricing front because I think they moved up on the values, but maybe I think corrective downside could be a buy opportunity into them. Similarly, likes of DVs, likes of Laurus, where you have the higher amount of generic API at the same time trans business, which is basically giving them larger impetus in the growth segments in which they are operating, therapeutical segments in which they are operating. So we believe that probably whatever the incremental capacity which they created, for example, like DVs, I think that could possibly result into higher amount of supply in the subsequent quarter, which they have also indicated. Resultant impact would be better profits, I think, from the previous quarters and previous years. So we believe that at least next 4 to 6 quarters, I believe that I think the DVs is showing relatively a stable roadmap compared to what it has demonstrated in last 2 years.
Okay, fair enough. That's the view coming in. Meantime, Kunal, how are you reading? Deven, let's also get a take from you as to what the outlook is within the entire pharma space, owing to the fact that we've seen quite a bit of traction building up here. Results as well have been supportive. What's the outlook?
Well, I think selectively you can remain positive. I think the companies which are in specialty generics, I think they hold a good ground because of I think the better quality of margin that they earn out of this business, likes of Sun Pharma, likes of Cipla, even for that matter, Dr. Reddy, and even Lupin for that matter, of late. I believe that I think there is portfolio increasing, I think, of the specialty products, specialty generic products, is basically driving better margin for them and continue to do so in subsequent quarters as well. Though some of the stocks might correct on the pricing front because I think they moved up on the values, but maybe I think corrective downside could be a buy opportunity into them. Similarly, likes of DVs, likes of Laurus, where you have the higher amount of generic API at the same time trans business, which is basically giving them larger impetus in the growth segments in which they are operating, therapeutical segments in which they are operating. So we believe that probably whatever the incremental capacity which they created, for example, like release, I think that could possibly result into higher amount of supply in the subsequent quarter, which they have also indicated. Resultant impact would be better profits, I think, from the previous quarters and previous years. So we believe that at least next 4 to 6 quarters, I believe that I think the DVs is showing relatively a stable roadmap compared to what it has demonstrated in last 2 years.
Okay, fair enough. That's the view coming in. Meantime, Kunal, how are you reading into the charts of some of these counters that have fired up very smartly over the last 1 month on the Nifty 500? Hindustan Zinc close to 70%. There's been Bharat Dynamics as well that has seen a nice 55% gain almost. What do the charts look like?
So, of course, the near-term trend is very, very strong, very powerful into these names. But then, trying to buy these stocks at the peak of such overbought indicators on the daily, weekly, monthly charts, I think could be a bit of a tricky situation because, the RSIs for many of these stocks are now about their 88s and 90 plus mark on the daily time frame and as well as on the weekly charts for many of these stocks, and I think that's why one has to try and wait out for a correction. Now, ideally in this kind of a scenario, the previous breakouts for stocks, they generally become a good support point for stocks like Hindustan Zinc, for example. The previous breakout was closer to 600 mark. The stock made a high of 800 and now is back again to that 700 zone. So ideally in this kind of a scenario, one has to wait out for a point where these stocks come back to their previous breakout point. So in this case, for example, for Hindustan Zinc, closer to 600 could be a good entry point.
Okay, point taken. Deven, before we let you go, talk to us about the biggest talking point right now, which is, of course, elections. What's your view? Have you made the top for the year around elections? Is that the assumption one should go with? And what's the best tactical trade around it?
Well, I think election is basically talking about few things. School of people talk about the numbers, I think, which are below 350. A school of people or a group of people, they talk about, I think, numbers even below 300. Nobody talks about numbers above 400. So should the market has to move up, then probably I think numbers above 400 could possibly drive the market on the upside. That is very clearly understood. In my viewpoint, I think the event risk is quite some at this point of time, and most of the people have carried the long position. So safe to assume that I think at some point of time, even after the event is played out, there is going to be some amount of profit booking from the long position. Though maybe the duration may not be long and the cut may not be very sharp, but at the same time, I think we are likely to see the market moving in a range. So to play safe, I think we believe that I think of the upper side 23,500 to 24,000 on the Nifty, and on the downside, I think somewhere around 22,300, 400 to 21,500. I think is the range in which I think the market is expected to trade.
Deven, good to have you on the show as always. Thanks for taking the time out and joining in.
If you like this video, then like, share and subscribe to ET Now.